just greet some of the people that are present, starting with my colleague, Deputy Minister Elizabeth Tabete, the leadership of the SABC board represented here, the leadership of the New Age newspaper and of Telkom, also my colleagues from the DTI, starting with the Director General and several of the other leaders of the department, and also associated institutions, business people who are present, ladies and gentlemen, and I think particularly the viewers and the audience out there. My department, the Department of Trade and Industry, has a mandate which covers a very broad range of activities of importance to economic development and economic empowerment. We're responsible for industrial policy, we're responsible for trade policy, we're responsible for policies around enterprise development, around economic inclusion, and around business regulation, and we're also in charge of a number of agencies dealing with a variety of matters related to all of that. But I was asked to speak particularly on the question of South Africa's trade strategy within a global context. I want to say a few words about that, but I will touch on some of the other matters. I'm sure that the conversation will touch on absolutely anything that we deal with, and I'm happy to engage on anything. Let me just say that a few words to start with about the global context, because I think the global context is very, very important to us. I think there are two features in the global context and the changing global context which are very important. The first is that the last decade or so, and even longer, has been witnessing a very fundamental shift in the locus of dynamism within the world economy. Dynamism has been shifting from the north and the west to the south and the east. And there are in the world economy something like 20-odd recognized emerging economies. And these 20-odd emerging economies are becoming the main drivers of economic growth and of economic dynamism in the world. And I think this is something which was been happening even before the onset of the global crisis. And it's evident in the fact that it is estimated that the 20-odd emerging economies will be responsible for something like 61% of global growth over the next few decades, and that these countries are already responsible for something like 1/3 of world trade. So I think that the share of trade, the share of economic growth of these emerging economies has been growing. This has been independent of the global economic crisis, but this is the second factor which I think is actually accelerating that trend. For example, in 2009, when the first wave of the global economic crisis struck us, the emerging economies were responsible for something like 90% of that global growth that occurred in that particularly depressed year. And I think we have seen that as the crisis has deepened, the locus of that crisis has found itself in the developed world, and particularly in the Eurozone right now, and that the hope of recovery from the crisis still resides in the emerging economies. Now, I think the good news for us is that Africa is very much part of the growth story. In fact, I think there's a growing recognition across the world that Africa is the next growth frontier after Asia, ahead, in fact, of some other parts of the emerging world. And this is exemplified by the fact that this year, the IMF estimates that the average growth on the African continent will be about 5.5%, and others put it closer to 6%, and 6 of the 10 fastest growing economies are located on the African continent. And I think that if one attends international forums or one engages with investors across the world, one can see that many of them are now taking seriously the African continent as the next growth frontier. Now, I think it's important that we consider a little bit what has driven this growth and where does Africa need to move from here. And I think this is very much what is shaping our own approach to trade policy, and in particular to regional economic integration. I think most commentators would say that there are 4 factors that have driven growth in Africa. The first one is that there has been a mineral products boom. As Asia has industrialized, there has been an increase in prices of mineral products. I mean, I know this is to some extent suffering some reverse at the present phase of the crisis, but over the last few years, about a quarter of the growth on the African continent has been driven by rising mineral prices. Secondly, I think we've seen a consumer-driven boom in Africa, partly linked to things like changing demographics, where we've seen industries like the cell phone industry and ICT taking over in Africa in a context where we were very, very deprived in terms of fixed line communications, for example, and that this has given rise to service activities across the continent, and we've seen, I think, this driving a considerable element of economic growth across the continent. Thirdly, we've been spared either a systemic financial crisis or a sovereign debt crisis, so we're not having to cope with those problems across the continent, and that's been coupled with, I think, better economic governance. And fourthly, we've had some infrastructure development which has taken place and which has supported economic growth across the continent. But what Africa needs to do now, and I think what you'll hear an increasing number of leaders across the African continent say, is that we need to change this growth spurt into a sustained development effort, and that needs the continent to industrialize. And that industrialization of the African continent becomes, I think, the fundamental task in the next phase as we move forward and we consolidate on Africa's rather beneficial position in the global economy. We consolidate this through industrialization. Now, South Africa has an important role, important set of opportunities, as well as an important responsibility, because we are, in fact, the most industrialized country on the African continent, at least in sub-Saharan Africa, we are that. And I think that this places some very, very important opportunities as well as responsibilities on us. Now, let me say, how do we see this happening, and how do we see this as shaping our approach to trade strategy? The very most important element of our trade strategy is our efforts to promote regional integration. And I think that we have seen that the emerging economies which have been successful, our fellow BRIC countries, all of them are turning now at the present phase of their growth strategies to consolidating their domestic markets as an element of their growth strategy moving forward. So China is turning towards its domestic market. China is trying to consolidate its domestic leg of its growth strategy. India has done that. Brazil has always done that. The problem we have as Africa is that colonialism divided us into 54 countries. And so when we look at the size of our domestic markets, they are just too small on our own as individual countries to be an effective base for economic diversification and industrialization. But if we look at ourselves as regions or as large swathes of the African continent, then we start to reach the numbers. So, for example, the project which we're engaged in between SADC, COMESA, and the East African Community, this encompasses 27 countries with a combined GDP of $1 trillion and a total population of between 600 and 700 million people. The continent as a whole has about 1.5 billion people and a combined GDP of $2.2 trillion. Now, this gives us the scale and the opportunities for diversification. And so I think what we have been focusing on as the next phase of regional integration is consolidating regional integration across the existing regional communities to build large blocks which can be the basis of significant economic diversification and industrialization. And that is what is guiding us as South Africa in our approach to the tripartite regional integration process. As you know, last year, President Zuma hosted a conference of SADC, COMESA, and the East African Community, and we agreed that we would consolidate a free trade agreement across the 3 regional communities. But we also said, and I think this is very critical, that our approach would be development integration. And this would be driven by saying that we need not to privilege
institutional arrangements over consolidation of real cooperation on the ground. And if we look at some of the barriers to promoting intra-regional trade on the African continent, I think we find that they are lack of economic diversification, lack of sectors which can produce tradable goods in each other's economies, and then insufficient infrastructure to consolidate and support the development of trading relations across the continent. And so we are saying that our approach to regional integration, and this is consolidated in the tripartite arrangement, has got to combine a trade arrangement like a free trade agreement with cooperation to promote infrastructure development and also to promote cooperation around industrial development. And African ministers of industry have identified three main focus areas for industrial development. And the first one is that we need to add value to our mineral products. We need to beneficiate them. We need to add value to agricultural products, taking account of the fact that something like 60% of the available arable land which is not cultivated in the world today is in the African continent. We need to add value to that through development of agro-processing industries, and we also need to develop a pharmaceutical industry to deal with the particular diseases and challenges of health that are faced on the African continent. And I think this is the first priority and focus of our trade strategy. The second one is that we are seeking to consolidate and build new mutually beneficial trade and investment relations with dynamic economies and dynamic sectors across the world. In the first instance, our membership of BRICS is a huge advantage in consolidating and building a relationship with the fastest growing economies and the most important leading economies in the emerging world. And I think that this relationship has enabled us to not just increase quantitatively our trade relations with our fellow BRIC countries, which have been expanding enormously rapidly. For example, our figures record that last year we had a 27% increase in total trade with our fellow BRICS members, and I know their figures say it's even more. But it's not just a quantitative expansion, but we're also trying to address the structural content of that trade. And this has been a particular focus of our efforts with the People's Republic of China, where we have said to them that we need to export to you more value-added products and change our trading relationship from one where at the moment we are largely importers of their manufactured goods and providers of primary products to them. And so we've agreed on a number of activities. Last year we gave them a list of 10 value-added products that we believed that we could supply to them. We held trade fairs in China around those particular value-added products, and I'm pleased to say that we managed to secure orders for value-added products with a value of about 400 million rand, and I think that that shows us what we can do. Earlier this week, we engaged with a delegation from the People's Republic of China, and we agreed with them that we need to consolidate this effort with them bringing buying missions to our country, again focused on value-added products. It also focused on investment in projects which can add value to mineral products. We are also finding, beyond our membership of BRICS and the trading relationship with our fellow members of BRICS, that there are an increasing number of countries and companies around the world which are seeking themselves to diversify, and that investment and trade relations with Africa and with South Africa are becoming increasingly important. And so, for example, we recently went to Saudi Arabia, and there was an agreement in Saudi Arabia of a joint venture company which would support investments both ways, something called the Saudi Arabia-South Africa Holdings Company, which will be capitalized to the tune of 20 billion rand and will support investments both ways. We are finding firms in countries as diverse as Japan, companies in Switzerland, companies even in the European Union and the United States, which I think are beginning to look increasingly seriously towards the African continent. And so our trade policy is seeking to promote all of those relations. But we have said our trade policy is subordinate to our industrial policy. Our industrial policy needs to support our trade policy, not the other way around. And our industrial policy has been focusing on the benefits which we can accrue from a number of activities which are going on in our country, including, I think very significantly, importantly, the infrastructure development program. Infrastructure has been identified as one of the major growth and job drivers in our country. It has been elevated to the level of a Presidential Infrastructure Coordination Commission, which has identified 17 strategic infrastructure projects across the country, embracing hundreds of particular sub-projects. And one of the important dimensions of that is that we seek from this to promote industrial development. Supplier industries into the infrastructure programs are critical to our industrialization. And so in our industrial policy action plan, we have identified this, together with the green economy and agro-processing as particular focus areas, but also consolidating on our work which we've done in the motor industry, in the chemicals industry, including pharmaceuticals, and in several other industries as an essential part of our industrial policy. Our industrial policy action plan has been the main flagship program of the Department of Trade and Industry. If I can very briefly say, our approach to empowerment and to small business development has been to support the emergence of productive small businesses that are capable of becoming involved in the productive economy. We have looked at our small business programs critically. And I think we have seen that we are probably dispersing our efforts too broadly across too broad a front and having insufficient impact. And we are trying to concentrate some of our efforts around those parts of the program which we think have yielded better results. And those are incubation programs of one sort or another, where we actually train people to become entrepreneurs in particular productive activities. And we have about 30 of those programs currently in South Africa, and we're looking to double that through our own efforts of our own agencies. But we're looking to increase the number far beyond that through partnerships with the private sector. And that's also one of the changes we want to bring about in our empowerment. We have found that the existing scorecards provide that points can be earned for things like supplier development, enterprise development, skills development. But we find that many companies are not really active there. So when President Zuma talked about passive shareholding in existing companies as the main form of empowerment, we are trying to emphasize those particular aspects. And we will be releasing a revised or amended scorecard in the near future, where we will be seeking sub-minimum points for activities in these kinds of areas, and if you don't earn a sub-minimum point, then there will be a deduction from your overall scorecard. And we're seeking to do this to encourage the partnerships that we need with the private sector to support the emergence of real entrepreneurship. Finally, let me say, the revision of the Companies Act, I think, is something which is intended to try to remove some of the red tape around enterprise development, to create a new model of much easier and much simpler regulation of company activity in the country. We are also engaged in a number of other regulatory initiatives, which we can talk about later on. But I think that our overall approach is to support productive activity, to support the industrialization of the country, and to see ourselves as part of a continent which, if we can get over the immediate shockwaves which are going to come from the global economic crisis, the continent and a country which has got an extremely bright future as part of the next growth frontier in the world economy. If we can position ourselves there, we believe that we have a bright future, and that's the thrust of all our efforts as the DTI. Thank you very much.